This is a subject that we are paying particularly close attention to since our arrival here with our London office opening in the spring. And as Steve, I think, so well articulated in his interview with Guy Johnson on Bloomberg Television this morning, that one of the most distinguishing characteristics of the UK market is the requirement by law that both the chairman and the CEO of an organization be different individuals. And that, of course, provides a very unique opportunity for the activists in the shadows, which is the title of this session. So I applaud Jonathan Doorley for bringing this subject to our attention some months ago. And I'm very, very pleased to have a representative group here of a few Americans, I might say, but I think for good reason, which Aaron, you'll most likely talk to.
Yeah. Thanks so much.
My pleasure.
Brief intro. So welcome. It's always tough to do the panel right after lunch, so I hope you're all caffeinated up. But I think activism is a topic that is pretty fascinating, interesting. We've had debates actually today, weeks before, about whether activism will come to Europe. So I think it is kind of a buzzword that we're all very interested in. So I hope you guys enjoy it. I'll do very brief introductions before we kind of switch into an informal Q&A, and then at the end, obviously, we'll open up to audience questions. To my right here is Selina Sagayam, from a partner at Gibson, Dunn & Crutcher, and has been covering M&A for many years, among other things, M&A, corporate strategy, and I thought interesting, worked at the Takeover panel for a few years in the UK, which is always a fun topic to discuss in terms of M&A, especially for the Americans. And clients include HB and Kraft, so some big names. Here to my right is Gary Weiss, who heads up the defense group and Nordic M&A at JP Morgan. Been there since 2005 and worked on some pretty well-known deals, including Vodafone Verizon and the Nokia Microsoft deal. So definitely plenty of experience in that area. Here to my left is Jonathan Doorley of Sard Verbinnen. He is the guy who's bringing them to London, brought them there a few years ago, 2013. To launch the office here. So very well known in the US and obviously building their brand and reputation over here, and has done a lot of work in activism, fighting the likes of Ackman and Icon. So obviously very interesting to speak to you. And to my left is Cass Sidrowitz, who's the CEO of Georgeson Corporate Advisory. Has a lot of experience in activism, proxy votes, proxy fighting. I guess a New Yorker who's lived in London for 12 years, like many of us, an expat. So. When I was preparing for the discussion, I actually did a search on the internet to see if there are any jokes about shareholder activism. Unfortunately, they're not. So I don't really have a great icebreaker, so I apologize for that. But there was something very helpful about how to give activism presentation from a colleague at CNBC. It was pretty simple. She said you have to have an inspirational quote about the company in the good old days that brings back kind of what it used to be like when the stock was performing well. You have to have a lot of verbiage, terms like unlocking value, competitive advantage, and then quirky names. So when you want to talk about really boring things like accounts receivable, you should call it AR Armageddon. And then, more importantly, you should throw some good people under the bus, the CEO, CFO, CEO. So on that note, let's hand it over. I wanted to talk about the title, Activism in the Shadows, which is a great title because the big question for me is in Europe. Activism, it does exist, but we expect more. And I wanted to ask you, Selina, is activism happening in Europe, but we're just not seeing it?
I think there has been an increasing trend, certainly in activism. The numbers on the face of it perhaps don't bear that out considerably. And a lot of that, I think a significant reason for that is a lot of it does happen privately, sort of like private engagement behind the closed doors. And I think it's a reflection of, if you'd like, perhaps a cultural difference on this side of the pond in terms of the best way of dealing with boards.
Yeah, and I mean the data backs that up. One report I saw said 20% of activism globally year to date was in Europe, the rest in the US. And Gary, I'm wondering, what's your sense of activity demand when you're talking to clients? I mean, is there stuff going on that we're not seeing, or is it more we're predicting there'll be a wave?
Well, I think right now there's been a lot of activism behind the scenes. I think a lot of funds that have an activist bent to them, and a lot of specific U.S. funds are allocating more capital here in Europe. I think particularly because they see the potential. The activist space, if you will, as an asset class in the U.S. has become quite crowded, and I think they see much greater opportunity to unlock value. There's been a little bit of a feeling that there's more concentrated shareholders registered, there's more political interference, and as a consequence, you won't be able to achieve the same success rate over here as in the U.S. But there have been some very, very high-profile examples where the activists have come in, the companies have done a lot of restructuring. I think that's encouraged more people to come in right now. And I think that while they're not doing the actual very vocal campaigns, they are on the register, they are writing letters to the companies, they are showing up at all the investor meetings, they are demanding to see the CEOs. So I do think there's a pretty active backdrop right now.
And along those lines, Cass, I mean, if you were talking to an American activist investor that was looking at targets in Europe, or the UK, what would you tell them in terms of what they should think about differently, how they should approach a situation differently?
The shareholder base is going to be very materially different than what they would likely expect in the U.S. in terms of your ability to communicate with the wider investor base, other than shareholders you specifically know, is hamstrung by the different market regulations in terms of communication. So in the U.S., activists can send materials to all of the underlying shareholders, while that's not possible in the UK and certainly across Europe. In Europe, you don't even have the visibility on who the other shareholders are to a large degree.
Right. And Jonathan, I mean, when you're talking to activist investors in the U.S. and they're coming to you with ideas, thoughts about things they can do here in Europe, I mean, what do you tell them? What should they expect, or are they wasting their time even trying it here?
Yeah, well, most of our practice is focused on advising the corporates.
Right.
But when we do discuss with select activists the concept of coming to Europe, there are very significant cultural differences. We don't think that that's a foolproof defense, and still think those can be managed. But the difference is, because corporate governance here is much cleaner, you can't just wrap yourself in the governance flag and not really have a foolproof agenda. So you need to do your homework, make sure you have a rock solid thesis to offer to other shareholders. And we've seen some activists who have come to Europe unsuccessfully, who come in and just ask for board seats and don't really have a well thought out alternative or plan, and that doesn't go well.
Yeah, a perfect example that comes to mind for me is the Peltz Danone experience, where he threatened, the world's biggest yogurt maker, which is very strategic to France, as we all know. When you're talking to clients here in terms of ways to prepare themselves or to defend themselves against potential activists, shareholders, what are you advising them to do?
Yeah, so we're sort of seeing now is, in the past there was always the hostile takeover defense plan that every board had on its shelf, and now that's evolving into you need to have the activist defense plan. And really what that includes is having a robust investor relations program where your strategic plan is well articulated to the market, you understand shareholder sentiment, because if you wait for the activist to surface, you're already on your back foot and it's too late, and no amount of key messaging to the market can help you recover from that. So really make sure that there's senior CEO level and board level engagement with shareholders, and making sure that the market fully understands what strategic and operational steps are being taken to create value.
Right. And Gary, since you're leading kind of the defense practice at JP, I mean, do you find the amounts of calls, inquiries from your clients is increasing in Europe as people prepare?
Yeah, I think everybody has witnessed, particularly the very high-profile campaigns in the United States, and they've witnessed the proliferation of these campaigns. And these executives, they're running global businesses. They're very direct comps are these American companies, and many of their shareholders are in the United States. So they're not immune to it, and they're not blind to it, and they're not in denial about it. I think there's a sense of, look, we're probably a shade off the pace here based on what's going on in the U.S., but we need to know more about it. We need to be prepared about it. So I do sense a greater awareness.
Right. And in terms of the activism that we have seen in Europe, the types of Cevian or Knight Vinc or whatever, Gary, do you think that someone like a Cevian, which has a much different approach, you could say maybe more, I guess, proactive, more cooperative than an Elliott or et cetera, would you say that one is going to be more successful than the other in Europe?
Well, I think to date, the collaborative, cooperative, long-term shareholder approach has had, for Cevian, has had some very positive effects. pitched up even in the shareholder register of banks now, like Danske Bank, and actually have been, I think, broadly speaking, kind of welcomed. And so I think that has been, good. But there have been some vitriolic campaigns, in Europe as well. Eric Knight has in the past been extraordinarily vitriolic. And I think, that's been more of the U.S. style. And so I think you'll see it proliferate. Just like in the U.S., you do see people like Value Act, for instance, who are more collaborative and long-term. I think you're going to see a variety of styles here as well.
Right. And Selena, in terms of the regulatory or the legal hurdles for successful shareholder activism here, what would you highlight in the UK or in Europe that people need to keep in mind? You mentioned things like collusive action, et cetera.
There is a hypersensitivity in the UK and Europe around collusive action and the concept of concert parties. A majority of the queries that we get are around that, and shareholders who are trying to seek support in advance of going public on an activist action. There are traps they need to be wary of, and what they're particularly trying to avoid is actually being treated as part of a concert party group. That having been said, I mean, there has been a change really in the regulatory landscape in the UK and Europe to facilitate collective action between shareholders, both in the UK and in Europe. In UK, very recently, just in June, a new sort of forum was launched, the Investor Forum, and there are the creation of engagement action groups with the specific purpose of actually bringing shareholders together in what hopefully is a safe sort of collective forum to engage with shareholders. At European level, ESMA has, at the end of last year, beginning of this year, they issued a whitelist of the kinds of actions which it's okay for you to do without tripping over the concert party line. But that is, I think, one of the key differences and points that activists need to be particularly aware of in playing on this side of the pond.
Does the very unique UK takeover code, which we've talked about extensively in the past, does that have any impact on activists, their effectiveness, their strategy?
The concert party rules are derived from the takeover code, and so that's one of the key hurdles. But the panel has sought to make it clear that they're not trying to stop sort of responsible shareholder engagement, and the government has been saying that as well. There's the new stewardship code, for example, which is actually encouraging active dialogue. And as an aside, I think one of the trends that we're seeing, I think a lot of us sort of associate the activists with the active hedge funds, but I think one of the things that we are seeing increasingly here is the involvement of long-only and institutional investors being actively engaged for the Standard Lives of this world, the M&Gs of this world, actually either alone or together with activists getting involved in some of these situations.
Okay. Are you seeing that as well?
Absolutely. I mean, you've seen a number of high-profile situations where Hermes, Ontario teachers have all taken very vocal, very active positions in the stock. And I think that it's on two levels. On the one hand, some of them have gone ahead and been very vocal in their own name. A lot of them have also put money out to the activists. So if you look at the limited partners right now, both in the U.S. and in Europe, and you see that the long funds are a big part of the constituency. And there's a sense. What the activists will tell you is that they're speaking for the silent majority, that the long funds, generally speaking, do not want to compromise their access to management. And so therefore, in the meetings, they feel, this is what the activists will say, that the long funds feel constrained to ask the hard questions and make the very, very difficult public statements. But they're all too happy to have these activists who do their own different type of work, and they're very happy to have them sort of lead the charge.
Yeah.
We've heard, I was just going to say, there's been several activists who've actually identified their own clients as been the source of some of their campaigns that they've run. So they are getting ideas from their own clients, and just as Gary said, it's not only the activists themselves, it's long money and pension funds. We're saying we've tried to access management, we've been unsuccessful. This may be an opportunity for you to kind of apply some leverage.
Yeah, and that's one of the biggest mistakes we see companies make in these situations is taking the long-onlys for granted, thinking that you have the Fidelities or the T. Rowe's locked down when they've potentially been the ones that have shopped the idea, a blacklisted company on their portfolio for value creation catalyst. You can't take that for granted.
Right. Would you say that reflects that long-only funds are also changing in mentality and the way they work? They do want to be more active, or you think, no, they have to use these other vehicles to voice their...
It depends on their own internal resources.
Yeah.
The bigger ones, like a CalPERS, for instance, have a lot of energy and time and resources to devote to governance and to devote to the activist campaigns. So I think it'll vary by fund, but I think that they all have a vested interest in this. And I think one of the common mistakes that we find that companies make is like, oh, the activist only has 1% of the shares, as if somehow that's dispositive of their power. The reality is, first of all, 1% for these companies is skin in the game. You're pretty material. And secondly, if they are reflecting the views of the broader long community, then you do have a real problem.
Right, right. And in terms of the things that they're looking to get done, looking to achieve, I mean, we know kind of often management shakeup, et cetera, but do you have an impression of what their top priorities are? What is kind of the main goal? What is the main outcome of these kind of campaigns?
It's evolved over time. I think if you had asked, going back to before the crisis, the big thing was financial discipline and balance sheet discipline, which was another way of saying, do a share buyback, increase your dividend, more shareholder remuneration, please. I think in the aftermath of the crisis, that doesn't resonate as much right now. I think it's very hard to argue that people should be giving back lots of cash. It's a dangerous world, and I think that most companies run a more stringent balance sheet policy right now, and most shareholders, also where rates are not dying for cash. They actually want to stay invested now. So it's evolved more towards issues of corporate clarity, saying, geez, does your current configuration of businesses really make sense together? Should you be spinning something off? Should you be selling something off? That's probably where more of the action is now relative to a couple of years ago.
Which seems to be, I mean, I know that's kept us very busy, these spin-offs, whether it be eBay, PayPal, HP, et cetera. It looks like that kind of pressure is really bearing fruit. Do you agree that spin-offs is a one very key outcome of activism?
Yeah, deconglomeratization is definitely a big topic, and most activist investors believe that you need to earn the right to be a conglomerate. And if you're not proving that you can manage complex businesses of different industries under the same umbrella, they expect you to spin it off. And that's certainly been an increasing trend. And if you can't figure out other stuff to do, to Gary's point, with the cash on your balance sheet, to go ahead and give it back rather than sit on it and potentially do a very risky, value-destroying acquisition.
Right. But is it me, or is it just cyclical? One year you want to be diversified, the next you want to be focused. And in terms of actually doing an activist campaign, I know you have a lot of experience with proxy fights, et cetera, and we kind of talked a little bit about the costs of doing a proxy fight in Europe versus the US. Can you maybe just briefly run us through the differences?
It's an extension of what I mentioned before in terms of the ability to mail and communicate with all underlying shareholders in the US. So a proxy fight there will entail multiple mailings. You've read headlines, vote the gold proxy card or vote this color proxy card. That's because the dissident is sending out their own proxies to the underlying shareholders and receiving the instructions back. In Europe, certainly in the UK, the community is much smaller. The number of registered shareholders that you could mail to is usually much less. And you don't have the ability to get to the underlying beneficiaries behind banks and brokers. So there isn't the mailing cost and the print run cost that you experience in the US. Really, the emphasis is on the media and making sure your messaging is out there, that you're getting as wide an audience to hear your investment thesis, and then getting on the road and sitting in front of as many of the long investors as possible. So I think that cost element is refocused on their own engagement with the other investors and making sure that the legals are kind of in line and that the communications with the relevant media, whether it's the UK or on the continent, are also covered.
Right. And you mentioned that there's important stakeholders that don't necessarily own shares. I was trying to figure out who exactly you were referring to. It definitely got my curiosity.
Sure. The proxy advisors are quite true. They don't own shares directly, but ISS and Glass Lewis, who are the large U.S. Proxy advisors, there's a myriad of others that exist in the UK, or each of the different European countries seem to have created their own version of that, which are locally focused. So wherever the activists may be directing their attention, you need to take them into consideration, because how an ISS, let's just say for the moment, recommends their clients to vote will have a dramatic impact on many of the long investors who are perhaps indexers and will just blindly follow whatever ISS recommends. In some of these, an ETF or a quant fund may just be directly following ISS's recommendations.
Got it.
And the other stakeholders that can't be ignored, obviously, in this day and age are regulators, politicians, employee unions, related to major transactions or corporate developments. All those people have an opinion and a vested interest in a various outcome, and they can't be ignored.
Right. Do you find that in general, the corporate structure in certain European countries makes them more difficult to impact change in terms of activism? I'm thinking, in Germany you have the supervisory board, the management board, labor reps, et cetera. Is that a much different model than in the US? So in other words, it makes activism much more difficult?
It can. I mean, it goes country by country.
Yeah.
A lot of it depends on your ability to nominate directors.
Yeah.
And whether or not you have self-perpetuating boards that basically, where the shareholders can vote up or down, but the supervisory board actually submits the nomination to the EGM, as opposed to can you nominate from the floor, and that varies, sort of different, by country, and I think that oftentimes will determine whether or not you can have a go with a real proxy fight or not.
And Selena, in terms of the amount, how big of a stake do you think activists need to buy in a company, 5%, 10%, to really be effective?
I mean, picking up on Gary's point, I think depending on the size and market cap of the company, a 1% stake can be very significant and can give you a very credible voice on the table. And if you are, an ICANN, et cetera, 1%, people will listen to you. It depends if you're looking at sort of, AIM-listed companies, for example, in the UK, perhaps a bigger stake, which is reflective of, bigger skin on the table may be required. In terms of, from a legal perspective, if you're looking at the ability to requisition a shareholders meeting, for example, here in the UK, you'll need 5% to affect that right.
But I agree with Gary and Selena, although you need to make sure as an activist that your ask is proportional to your stake. If you own 1%, you can't go in asking to get control of the board right out of the gate. And we've seen that in Europe a few times, and it's failed miserably. So the smart activists are the ones that are going to have a credible ask out of the gate.
And do you have a sense in terms of, the sectors or the size of companies that activists are looking at in Europe? I realize that's a bit of a broad question because Europe's so different, but I read an interesting report that said, they're increasingly focusing on mid-sized firms between 250 and 2 billion. Do you get that sense, or what sectors do you think are the most vulnerable to activism?
I would say right now, pretty much all the sectors have had a fair amount of real activism. The sector that's probably had the least amount of activism to date has probably been financial services, just because there's been so much going on from the regulatory side that I think to really have a tilt at a bank right now, given how cosseted they are by the regulators, is going to be very difficult. And I think most activists, take that point. But pretty much all the other sectors have seen, and it's been sort of, really throughout Europe, you've seen it, quite a bit. I think the UK gets a disproportionate amount of it. Probably a lot of it has to do with the governance. Yeah. I would say the Netherlands gets a lot of it as well. Again, because you have so many large cap companies that are incorporated in the Netherlands for a variety of reasons. They're very global. There's a lot of liquidity, and the governance regime again is also pretty well understood.
Yeah, and at least in the U.S., activists have proven that size is not a deterrent. It used to be that if you had a certain market cap and were performing reasonably well, you were insulated from activism. But now, we've seen the likes of Apple, P&G, Pepsi all come under attack. So, everyone's free game at this point.
And I guess one of my last questions before we open it up to the audience would be maybe the big philosophical question: is activism a necessary evil? Is it a good thing or is it a bad thing? Tess, what's your opinion?
Activism is effectively an engine for unlocking value, and whether or not the long investors in the stock are pushing management hard enough to kind of think critically about their structure and about their portfolio of assets may be an indication that there isn't enough of that self-critical thinking. So I don't think it's necessarily a bad thing. I think it's probably more a cultural shift, but it's certainly everyone's looking to increase shareholder value. What the time horizon, I think, becomes a question that is debatable in terms of whether management and the activist timelines are aligned.
Good. John, what's your take?
We don't view activism as inherently bad or evil, but we definitely don't view all activists as created equal. And there's some that, as Gary mentioned before, there's some that actually create value and are constructive, and there's others that use the platform to market and gain further assets. So it really has to be looked at on a case-by-case basis.
What do you think, Gary?
I think activism is a natural outgrowth of shareholder democracy. If we accept the idea that shareholders should have a voice in how their companies are run, then activism is just going to be a natural outgrowth of that. I think that, to a certain extent, in the aftermath of the financial crisis, I know particularly in the UK, people were bemoaning, where were the shareholders? How come nobody stood up and put a brake on some of these, crazy ideas that management were banding about? So there was a sense that they would like the shareholders to be more engaged. Obviously, to say you want that engagement to be constructive, and not and not parasitic, and that but it's to throw out just the parasitism, the speculation is to potentially throw out the baby with the bathwater.
Right. What about you, Selena? Just in a few words.
Sure. I think even though I'm a lawyer, I actually like some data. And I think what I found quite interesting from 2014 was a report by FTI Consulting, actually, which looked back at the increase in total shareholder returns that, following activist action has resulted in a number of companies. And they've indicated that actually TSR has increased for at least, over a 2 or 3 year period after activist action by about 5% on a sustained basis. And if whether or not you unlock value or you think they're the dark side, I guess the data speaks for themselves.
Good. Anybody in the audience have questions? One over here.
Hello, I'm Adele Thackeray from Novus Capital. I'd like the panel's thoughts, please, on poison pills, thinking really about Sotheby's and Dan Loeb for a start.
Well, I mean, since the implementation of the EU Takeover Directive in 2005, which I think basically brought into play a lot of the city code on takeovers, poison pills are they're few and far between. You have some of the foundations, like you would have seen in KPN, for instance. Some of that still does exist, but the true poison pill, the true Marty Lipton, sort of concoction, doesn't really exist here. So I don't really think that poison pills themselves. I mean, even in the U.S., I think it's become very passé. If you went back 7 or 8 or even 10 years ago, the big theme in activism was corporate governance, and within that, it was get rid of your pill. You roll that forward, most of the pills have been actually retired on the back of previous activist campaigns, and the minority of companies, I think, in the U.S. right now actually have existing pills. So I don't think that the pill itself is really going to prevent activism, nor is it what activism is currently about.
What do you think?
When used for its intended purpose to buy more time so that minority shareholders can make an informed decision, it's obviously a very effective tool. But when used to just further entrench management teams or boards that don't have any business being in their positions, it's obviously not helpful. So I think we've seen the market tend to work that out, to Gary's point, and it will continue to.
Any other questions? In the back.
Thank you. Nigel Brindley, Stratus Infrastructure. With so many large, and when I say large, I mean mega fines on corporates now being imposed by regulators, particularly in the financial sector, I'd be interested in your views as to how activists can, because they have so far failed, to hold executive to account, because all these fines do is they punish the business and the business owners and the shareholders. They don't punish the executives that have got the companies into the positions where they are eligible for these fines.
Selena?
Well, I mean, as part of the activist playbook, of course, and you see that increasingly, is shaking up the board and shifting boards, not just putting on their own representees or sort of like nominees, but actually affecting board change. I think that there is a role potentially there for activists to play, albeit ex post facto. And I guess to date, that's been the challenge. It has happened ex post facto, and you're right. I don't think we've seen enough sort of challenge in advance in terms of questioning sort of from an operational compliance risk management perspective. That tends to be, I haven't seen many instances of those kinds of questions coming up on the agenda.
Yeah, I think if anything, that's likely to be lumped in with the bucket of just CEO underperformance and whether or not he or she really has a grasp on what's going on in the business and is managing risk properly.
And for long investors who are quite critical of remuneration plans and the policy right now in the UK, we've certainly not seen that type of that line of questioning coming in and being put to the REMCO or management. Perhaps it's a missed opportunity, but I think the long investors as well as activists are not necessarily picking up on that point.
Maybe one more question and then we'll close it up. Yeah, in the back.
Hi, it's Josh Black, Activist Insight. I was just wondering if you could expand on the comments you made about long-only institutions and their relationship with activists earlier. It seems this year in Europe, when activists have relied on institutions in public votes and other situations, the support hasn't been forthcoming. So whether there's still a bit of an anti-activist bias and if their attitude to the US funds is different to their attitude to the European funds.
Yeah, I'll start. I think, culturally there's still a difference between the way U.S. and European long-only views activists. We find that European longs are increasingly becoming more receptive, but you're right, when it comes time to vote, they haven't yet come out in numbers. But, it took a long time for the U.S. longs to come around, and we expect that, European longs will still be a few years behind them in terms of that development, but it's certainly trending in that direction, particularly, in a yield-starved environment. Everyone needs to hit their numbers, and if there's going to be someone who can push that catalyst forward, they're likely to get support no matter who they are.
Just to add to that, the other element that is driving long investors' own support of activist campaigns is the listing vehicles that the activists are using to raise the funds, their funds. So if you look at Sherborne and some other, certainly Crystal Amber, they have listed vehicles. And so the targets, the investors of those listed vehicles often overlap with the institutional investors of the targets of their activism. And so by the very nature of that, you often have a portfolio of long investors who are being supportive of the activists, not necessarily because of the quality or the work done on their investment thesis, but by the very nature that they have money at stake, and that's driving their voting interest.
Great. All right, thanks so much for listening, and thanks to the panelists, and see you soon.
Thank you.